Hey traders, this is Christian from Hertz Tribeca Trade Group, and this is your end of day recap for Thursday, January 20th. Well, was the bounce going to be a turn in the market? Well, I think we answered that question today. Not so much. Market not really ready to do that, and we'll talk a little bit about some earnings here. For first thing, risk disclaimer in front of you. Everything that we're going through in this video is for information purposes only, not giving out any advice or recommendations. So yes, let's talk about Netflix just for a second. And now that we are officially or unofficially in the heart of earnings season, there's definitely some things to some observations. So number one, if as we're going along in earnings season, if you're kind of newer to trading or analyzing or watching some of these earnings reports come out, reminder that the most important thing, like from a trader's aspect and for investors too, is what the company is guiding, what their guidance is going to be. I was earlier. I was just listening to Janet Yellen. She had an interview on CNBC, and I was just going through Twitter, and I was just seeing too many people are surprised. They're like, "Geez, I don't get it." With this market, Netflix reported a pretty good quarter, and they're down this much. Well, it's nice to kind of have a good quarter, and it's nice to kind of put together like a string of good quarters. But in terms of price action and making money in this market, you have to look at the guidance of the company and what they're saying about their future prospects of business. If someone has a wonderful quarter, but they say that they have no business coming in the next quarter, what do you think is going to be the stock price is going to be, right? Or, we saw another example of this earlier with Peloton, right? Peloton is going through a more difficult time because their business has changed. The market environment has changed for Peloton, right? They were in a really good environment for them, was what happened during COVID times and the lockdown, right? They're not going to, and we've talked about this previously, and this is not new news, but that was a very good time for them. And their business, unless there's going to be another COVID lockdown and people can't go out and they can't go to the gyms, right? That's kind of their peak business. Because people were forced to didn't have anything else that they could do. So again, you can't look at what the company did previously. You got to read about their guidance or listen to their conference call. So again, I'm just going over this because it's an important point. And at this point, it shocks me that people are thinking, oh, I don't understand why the stock is down. They had a great quarter. Well, the guidance that they put out is a big head scratcher, right? And you could look, and we talked about Netflix is notoriously just not a good name on earnings, but big red headline on Bloomberg, right? Their first, so this is this is for this quarter. First quarter streaming paid net change 2.5 million versus they're estimated to be 6.2. So who knows what, you have to listen to the conference call to find out what they're thinking and why their business is changing and evaporating that quickly. So I'm interested to know that. But again, you can't look to see, oh, well, last quarter they did this on earnings. So anyway, this is particularly, and here's something to observe right now is what is going on with some of these companies that are reporting earnings. Now, of course, they kind of picked a tough day to report earnings. The market got hammered today, so that's part of it. But as we get to other earnings reports, take note, ISRG had a good quarter too, and their guidance was pretty good. They did mention some things from what I've read, but look at the initial move up to 305. The stock's up to 280, right? Nobody's buying it. No institutions, right? Forget about retail, right? The institutions drive the market. They're not interested in this. Look at JP Morgan, right? We talked about this last week, right? Look at what has happened to JP Morgan. Right. This is very alarming to me because this is not something that we've seen in the last 5+ years. Is JP Morgan going down 6% on the day of earnings and then continue continuously moving down. This is not a tech stock, right? This is not a high growth name. So the fact that this name is getting pummeled, and it's been 1, 2, 3, 4 days, and still there's no institutions that are buying this, right? There's a problem right now. So what's the conclusion of this, right? To say this is to be careful, to really kind of respect what's going on in the market, and realize that we can't control what's these prices right now that are just falling and there's no buyers right now. So this has not been anything, today's not much different than yesterday, and what we've seen this price action so far this year, other than we kind of started positive for the day. But we had our levels to watch for the day. And, really, I try to say this and say it a little bit more frequently in these videos, is the reason why I use value areas in the market webs is because it allows me to unemotionally take a look at what is going on and respect some levels, right? We talked about this yesterday. 4555 spot 25. Sorry, I took labels off so you can't see, but let's just say 4555, right? That was a level, the bottom of value for the month. We broke through that intraday. It looked like we had a chance to kind of stay back in value. And, when I sent out the midday video to members, I said, hey, if we close back in here, it's a starting point for a possible turn. But, the most important thing is always the closing print, not where we're looking at, 10 o'clock, 11 o'clock in the morning, because, hey, this could have been, but it just wasn't. And, to see this as well, I think is not the normal. And we've been saying this for a while, that the price action that we're seeing is different than what we've seen over the last couple of years. Now, that may change, and we don't know when that's going to change. Is it the Fed meeting next week? Is it some other event that happens? We just kind of have to sit on our hands and realize that if we are taking some shots in this market, know where the resistance is. And if you're off to a good start in a trade, make sure that you're taking some profits. There's a couple of things that we talked about earlier with the NASDAQ, right? And I'm going to mention those to you here on the 1 hour chart, because this to me is important, right? We mentioned this a couple times. Just wait for Thinkorswim to adjust. So this was the bottom of value that we broke, right, for the week, right? I'm on the 1 hour chart. This is the value area for the week. Again, it's important because these are statistically significant levels. We tried to basically get into value. We were rejected. Notice what we did today at 10 o'clock. And I was kind of saying in the room, I'm like, hey, we're testing a resistance level. So first of all, that's not a place to add risk. If you bought the dip at some point this morning, it's a place where you want to be saying, taking some profits and then watching to see if we can actually turn the corner, right? That's the best in this market, in my opinion, that you could do, because you really can't make a prediction about when this market is going to turn, if it's going to turn anytime in the near term. You just kind of have to watch some of these levels and have a plan, kind of think it out a little bit, ahead of time. If we're not going to turn the corner where we should, then think about what you're going to do if it doesn't, reducing your long. So here's what I did for the day. I always show the trade blotter. Sure. I tried a couple things. I was looking at this new relic play. I've liked how the chart looks the last couple of days. I said on Twitter that if we break value, I was going to be a buyer of this thing. Intraday doesn't count, right? So I did pre-position into that, right? And I took a quick target, because you have to in this market. If you don't take some off the table for profits, you could see the result of what that stock did for the rest of the day, and you have to have a stop price. Here is my stop price. I didn't even let it get to the stop price. It's just not happening, right? I can't make it happen. It is what it is, and if it's not going to break where it should be, then there's no reason for me to hold it to the stop price, right? And again, I'll set my alert for tomorrow, maybe maybe a week from now, who knows, right? But you just kind of watch your levels and then react to when you have some to when you have a signal. And if you don't have a signal, you just kind of sit on your hands. That was a theme that I mentioned yesterday, and I just put it in here too, because I stressed this in the midday session. I said, I'm not going crazy with this little dip that we have in the market because we don't know if it's going to be faded. So watching and waiting, you'll find that when we have these deep corrections, my opinion, unless you're really kind of playing things on the short side, which, hey, there's a lot of money to be made on the short side. And if you can get comfortable with that and understand the risk involved in that too, then, more power to you. But if you're not willing to play things on the short side, then you have to just kind of sit and wait for this episode of volatility to make its way through. I did play a couple things to the short side. By the way, I tried this name, but again, I just wasn't liking the price action and got out of this thing somewhere in here. I believe I mentioned it. Maybe it's in the other chat, but here's a couple of my short trades. Again, I didn't put them in the trades channel because it just wasn't worth it, because I'm in and out of these things so quickly. Where's Upstart? Oh, maybe not in trades. Here we go. So I took this thing off. I just kind of saw the writing on the wall towards everything was being faded, and I didn't stay in this as long as I should have. So again, it's tough. It's tough to, this was the trade plan for me for entering that trade. Once I started to see this break, I bought some puts, kind of stayed in it till here, and I exited at the top of value. Now, of course, this thing went much lower. All right, guys, so that's it. I would say hang in there. Another thing that I'm watching is the equity put call ratio, right? I need to see that extreme, right? I kind of just put this with this blue line is the S&P. I know it's kind of probably difficult to see on your video. Let's see if I could change the color with it really quickly. Put this in yellow. But one of the things that is a head scratcher to me is why we are not seeing a big pickup in puts being bought, equity puts being bought, not index, right? So I'm looking for the equity put call ratio to jump higher, right? Right now, we're still not seeing panic in this market. I'd like to see some sense of panic when the market dips, because from a psychological factor, we often see reversals off of when that happens. But you could take a look at a 5-year chart of the equity put call ratio with the S&P. You could see these spikes often act as turning points. Again, nothing's 100%, right? But look at what happened back here, right? Here was a huge spike in equity put call ratio. We did end up going a little bit lower, right? This was the big move in March of 2020 with the put call ratio spiking all the way up to 1.27. Now, again, that was a monumental pullback. Other more normal pullbacks, usually we see this put call ratio, equity put call ratio, get to like a 0.775, 77. Look at where it is now. It's not indicating any of that. Now, this number has not been released yet for today. It gets released somewhere around 8 o'clock, depending on the SIBO. I would be looking for this to get back around like 0.7, 0.75, 0.8. The more panic, the better in this thing. It's not there yet. So I'll be monitoring, I'll be watching. But here was the reversal that we saw in the beginning of the month of December, right? Put call ratio got to like a 0.74. We did see a good bounce off of that. So again, this is just one factor. I kind of pull some of these factors together, sentiment factors and so forth, and the price action, which is number one. So I'll leave you with this theme: watching and waiting from the long side, right? To wait for some confirmation that there was a very nice post, by the way, too, which I thought was excellent, by what is her name? Oh geez, let's see if I can find it really quickly, because I thought it was really good, and I am forgetting who this was from. Oh geez, I don't have it. All right. Well, if I think of it, if I think of the technical analyst, but what she said, I have what she said. She was on CNBC earlier and she said, hey, I'm looking at this particular level in Amazon, right? But once it gets to that level, it's not, when you're trading technicals, right? You want to still wait for confirmation, right? She said, basically what she said is you want to see the momentum change. Once you get to a level that you're watching, you want to see also a change in what is happening. Meaning, if we're falling as we are right now, you want to see buyers come in and support that level and a turn happen on that level. You don't have to get the exact perfect level down to the T. What you really want to be watching is, hey, is this a level that buyers are really going to step in and start, you know, buying the dip there. So I apologize, I can't remember her name, but she's a really good one too. Sorry, I'm stalling trying to remember. But anyway, guys, have a great night and I'll see you tomorrow.